Alright, you guys ready to go live here? We're gonna be spitting some fire, some truths about the markets. Let's take a look at comments here. What's going on, everybody? I forgot. I killed the. Let me flip music here. Some concentration beats. For me. Good evening, good evening. So, we are going to get started here with a question from Carlino and the CTM Discord channel. See who all we got on here. Let me say hi to everybody before we get rolling. Can everybody hear me all right? Great evening. There's a fan noise. Yep, let me kill that. Be right back, guys. I'm sorry. Forgot to kill some stuff. Gonna kill my miners. Alright. Killed a bunch of crypto mining rigs. Hope that's better. Oh, let me take these off. Alright, I killed the fans and turned the crypto miners down a little bit here. Is that better? Good evening, good evening. Yeah, you are in a data center. That's my office. That's why I have these sound deadening headphones that I wear all the time. I'll be happy when I get to move this equipment out of my office. Namaste. Alright. Good evening, good evening. I got my crowd in and waiting. Alright, so, Carlino asked about, could you explain leverage trading tonight if you get a chance? Alright, Carl. Let's take a look here. Let's talk about leverage trading. I've got an article here on Investopedia pulled up that we'll just walk through it here. The main thing to understand about leverage trading is that with leverage trading, the leverage is, if you know like what leverage is in a traditional mathematical sense, right? So if I have, I'm trying to lift an object that's really heavy, and say I have a 1 ton or 2,000 pound block of something, and it's really hard for a human to pick up a 2,000 pound block. Well, and I just thought of this on the fly, I literally hadn't planned to talk about this, but I just thought I better explain even what the term leverage means. All right. So I want to pick up this 2,000 pound block. A person, very bad person, would be hard pressed to pick that up. I think the strongest men in the world pick up like a little over 1,000 pounds deadlift or something. I forget what they can deadlift, but if I get a really long, steel pole of some type, and I get a little lever here, and I go way over here, and I have a little person, a very bad person, pull down on that lever, he's going to pull down a lot less than 2,000. So if this side is 1/5 the size of this side over here, this is 5 times as long on this side, what I've got is I've got a 5-to-1 ratio, so I actually have to lift 1/5 of that 2,000 pounds, which would mean I have to lift, 400 pounds? So it makes it a lot more, reasonable to manage. So that's leverage, right? That's the basics of what leverage is. It's being able to gain a mechanical advantage on something somehow. All right, so looking at it from key takeaways. Leverage is the use of borrowed funds to increase one's trading position beyond what would be available from their cash balance alone. So that's the main thing to understand, is that in order to get in our little scenario here, this steel pole and this little lever thing that allows us to lift more. So say my base account, say I'm trying to trade 1 or 10 Bitcoin, but I only hold 1 Bitcoin. Well, if I want to trade 10 Bitcoin, I need to be able to leverage my way into that, right? All right. So what you're going to do is you're going to borrow with the equity of your one Bitcoin, I'm going to draw one shiny Bitcoin on here. Actually, I got a Bitcoin thing. Let's do that. And I've got some really like key points to understand about the markets that I gather a lot of fewer people understand than I kind of thought. And this is probably stuff I didn't understand. I learned along the way too, and you kind of take for granted stuff you figure out along the way. So I've got my one shiny Bitcoin here, and so my account is one Bitcoin, but I want to trade, say 3 Bitcoin, which is 3-to-1 leverage. So I want to go long 3 Bitcoin, but I actually only have 1 Bitcoin. So I need to borrow 2 Bitcoin somehow. So I'm going to borrow these 2 over here. Well, how do you borrow those 2 Bitcoin? Well, you have to take out a loan, basically. So what a margin account is it's just a revolving line of credit, basically. And so what I do is if at $60,000 I decide I want to go long Bitcoin, but I only have 1 Bitcoin, well, I can take out a loan for a couple additional extra Bitcoin, and I can go long, maybe say 2 additional Bitcoin. So my effective leverage is, I think that makes it 3-to-1. That actually could be 2-to-1. I think that makes it 3-to-1 leverage. So if you borrow twice what you already have, it's 3 then to 1. You're long 3 total, I guess, in theory. It might actually be incorrect, but it doesn't matter. I'm just explaining the basics of it. And the reason I don't know that is because I never get anywhere near maxing out my margin account. Good evening, good evening. So let's take a look at some comments here. So David, let me explain that to you. This is it. I'm lightly leveraged, so I'm very lightly leveraged, right? So back to this concept. So I'm borrowing money. So if I'm going to go long 3 Bitcoin at $60,000, $60K, I'm actually borrowing I'm borrowing 120K, right? So I'm taking out a loan to borrow 120K to buy these 2 Bitcoin. So I have $180,000 worth of assets that I'm long, but I have to pay back this $120,000. So if the price of Bitcoin goes from $60,000 to $100,000, which would be great, that would go ahead and get that done with quickly, because I'm kind of waiting on something like that, right? So now my 3 Bitcoin, I had $180,000 worth of equity. Now I have $300,000 worth of equity, right, in total, and I owe $120,000 loan that I have to pay back. So when I sell these 2 additional Bitcoin, or these 3, this would actually be 2-to-1 leverage, right? So I'm taking out a loan for 2, whatever. So I want to pay back these 2. So I need to sell at $300,000. Say I sell my 2 Bitcoin. I actually sell these. This is going to get very confusing, so I need to take out the base. I just never realized it's going to get kind of confusing. But nonetheless, you get the idea. I borrowed $120,000. I bought 2 additional Bitcoin. If the value of these go up to $100,000, then I have $200,000 worth of borrowed Bitcoin. I sell my 2 Bitcoin for $200,000. I repay the $120,000 loan, and I'm left with an additional $80,000. Okay, that's how that works basically. Or you can settle out into a Bitcoin. So if Bitcoin's at 100,000, you would get I don't know 8 tenths of a Bitcoin, 0.8, 80 million satoshis. All right, so that's it. You're taking out a loan to increase the size of your position. Now, what I do, I'll share with you guys. I don't want to talk too specifically about what I do, but basically, my 2 brokers that I use allow me to take out 5-to-1 and 10-to-1 leverage, which is a lot. So I'll go ahead and open the position just to be able to expose as little Bitcoin as necessary on the exchange. Say I take out a position, I'm going 5-to-1. I think. So I can have up to 5 for my 1 base Bitcoin. So I take out a loan that's actually 5-to-1. But what I don't do, so I borrow, but I don't actually go, if I have 1 Bitcoin on the exchange, I don't go buy 5 additional Bitcoin. I take out a 5-to-1 loan, and I actually buy maybe 1 additional Bitcoin at 5-to-1. And what that does is on that trade, I've only tapped, by doing that, since I opened this at 5-to-1, I've only tapped 20%. Yeah, 20% of my account. So basically, what I do is I go roughly, I'm usually about 2-to-1 leverage at max when I fully built out my position. So what I might do is say I have 1 Bitcoin on an exchange. I'm going to borrow $60,000 against my equity that I have in here. That's $60,000 worth of equity. I'm going to borrow $60,000 from the exchange to buy a second Bitcoin, right? And That's my second Bitcoin. I'm borrowing $60,000 here to get that second Bitcoin. All right, so I borrowed this amount right here. But I can borrow a lot more than that because I actually opened this as a 5-to-1 leverage. So I can borrow up to, whatever, 5 times 300,000. I can borrow up to 300,000 at 5-to-1 leverage, roughly, right? So what that does is, now I'm 2-to-1 long Bitcoin. Now that leaves available funds for me to go, say, 2 to long. I want to open a 5-to-1 long on Ethereum as well, and I may go, 10% of my account. And I may borrow, instead of borrowing $60,000, I may borrow $30,000 and go buy me some Ethereum. And so, I can continue to use my account, my assets in my base account. That's the equity that I'm borrowing against. So the lender, the exchange, is lending me this money tied back to my equity here. So they have the right then, because I'm putting this up as collateral. So I'm putting my Bitcoin that I actually control. Now it's not mine because it's not my private keys, but you get the idea. I have a Bitcoin on this exchange, right, that I control. They have the right to liquidate this. That's the thing about this is the thing. When you open a margin account, you put this up as collateral. So then if the price of Bitcoin were to crash to $20,000, so I open this at $60,000, this whole trade at $60,000, and just 2-to-1. If it crashes all the way down to $20,000, I now owe more than the value of my original Bitcoin, and so they will liquidate my entire account and sell my original Bitcoin. And I'll lose my Bitcoin. So I won't just lose the value of the other one, I'll lose my original Bitcoin because they'll liquidate that. That's the scary thing about leverage that you guys have to be aware of. And it's especially true, it's especially difficult if you were to actually go 10-to-1 against this, right? It takes just modest, and in Bitcoin terms, it takes a pretty modest fluctuation to wipe you out of a 10-to-1. Like a 100-to-1 position, you would get liquidated constantly. There is no way that you're ever going to be able to time an entry and get in and out unless you're trading on a super short time frame. Normal market fluctuations are going to wipe out any sort of high leverage accounts. So just know that. Let me go to comments here. I'm sure that Oz, I'm explaining leverage because somebody asked me to. This was a question we had from one of our regulars in the CTM group, and so our CTM Discord group gets first pick when it comes to topics, and so this was the topic he wanted me to open with. Now I've got a lot more to talk about than leverage. We got to talk about how markets actually work here, but I hope. All right, I got some comments here. So does that make sense on the leverage side? Anybody disagree with any of the technical, explanation of that? I try to keep it super simple. I'm not making this super complicated. You're borrowing money to buy more of something. And you're putting your assets up as collateral to borrow that money. And if your account gets dropped to the point that you're the asset that you hold as collateral, if you get down to where you're borrowing, say, 96% of that or whatever the liquidation level is on that exchange, they'll liquidate everything. So just know that. So you need to have stop losses in play as well before that, so forth and so on, risk management and sizing your positions and everything else. So it also takes me a really long time to get up to a 2-to-1 leverage because I don't do it all at once. That's the other thing, is that if I were to go to if I were to one single entry, so say I like this, let me find a good 12-hour. This 12-hour entry right here, beautiful entry. Right here, right? Beautiful entry. So say I took that 12-hour entry right there. It'll be an entry for me. It's a CTM entry, we'll call it. Pretty much. Yep. Uptrend, breakout, retest of this level right here, resumption, so forth and so on, right? Everything matches. I still wouldn't take a full 2-to-1 position because where I have to place my stop loss on this, I'm going to be risking probably a lot more than 1%. So I have to build my positions in chunks. And I take a bunch of smaller positions, and I'll keep moving the stop loss up such that my original positions are either the stop loss is in profit or it's break even, so I can continue to open new positions. And I build myself up to that 2-to-1 leverage, and then I'll exit, systematically on the way up. So I'm at 80%. So I'm basically right now, roughly, you can think I'm like 1.8 to 1 leverage, and that was built. This was my last entry right there. I had that entry, Maybe an entry here. Maybe an entry there. None of these hit my stop loss. Something like that, right? So I built this position 1, 2, 3, 4, 5, 6. I had 2 more somewhere. Something like that, right? So I've had 8 small entries all through here, building this position up. Original stop losses were here. When this firmed up here, I moved stop losses up, and then I moved them up again, and now I moved them up again. And then when we get another entry signal here, I'll move all these stop losses pretty far up, because this is a totally new paradigm that we're in. Okay, that's how I do it. It's just my way of doing it. You know, it's not any sort of specific system. This is not financial advice. Darn it, I forgot to start with the disclaimer. Somebody's gonna sue me to death one of these days, unfortunately. Let's get a van by the river. Let's pick one. I got. Oh, do I have his? Yes, I have it. Aha. So this is not financial advice. If you end up taking my advice, you'll probably end up losing all your money and living in a van down by the river with these cute puppy dogs, Doge and his friend Boneholder. All right. Let's see here. Back to comments. Leverage is simple. Okay, so let's look at the comments here. Isn't it odd that Coin IPO, which sucked the money out of other crypto stocks, occurred precisely as the Pi cycle cross, which I had dismissed as invalid? IPO traded down too. Yeah, I mean, that is an interesting coincidence. The Pi cycle crossed, and guess what? The Pi cycle crossed right here, and then it went to break out. So here's the thing. I would have sold, I was going to, no matter what, take some profit when the Pi cycle crossed, no matter what, but I was looking to take profit regardless of if I thought this was the end of the cycle or not at the Pi cycle cross. However, I did not, and here's why. It crossed in consolidation. You see all this consolidation we had through here? Right, we had been consolidating a long time. And I told myself, and I think I might have said this, hopefully I said this on a live stream, if it crosses during consolidation, that's an absolute 100% signal this is not valid whatsoever. And it did. It crossed during consolidation. Therefore, this is totally 100% invalid. The point of the Pi cycle cross is to catch the blow off top. This is not any sort of blow off top. This is consolidation. You look at this. All right, I've said this I don't know how many times. Since our peak here in February, we're still early and in the middle of the bull run. We've gone up 7% in 53 days. You go back any time in any of the bull runs prior, if you're up 7% in 50-something days like that, your odds of winning any trades at that point are very high. Because now, yeah, of course, it can still come down. There's been periods of time where it stayed basically sideways for up to 100 days, but the next sell-off, if there was an unexpected sell-off, would probably take us back to like the high, the mid-50s at worst, and then some more consolidation, and then break up, but you would have a big breakup at some point and come back down to this price level. What'll probably happen, speaking of the Pi cycle cross, what'll probably happen is we'll go ahead and get a big breakout here, and everybody's gonna be out. When the next rejection happens, say we break out really hard, right? Say by the end of the month we're at 80-something thousand. We get above this top upper trend line. We're up in this level here. So if you draw a really long trend line, I got another, hold on. Let me go to my other chart. It's got the longer term trend line. 1 second. This is the Coinbase feed. All right, my Coinbase feed has got some really good long-term trend lines. And this one's better this is what I'm using more for my long-term price projection. So 76,000 is what I'm kind of looking at for a good take profit. I'll shave a little bit at 68, just so y'all can see that on my chart, right? I'm gonna shave some right around 68, 70, and look for entries. For entries. But say at the end of the month we're trading up at $76,000, and this is a nice big parabolic move. When this comes back down, everybody's gonna say, "Oh, the Pi cycle cross was valid. See, we hit our peak was 76, and now we're coming down." And they're gonna be dead wrong because the Pi cycle cross happened way over here in consolidation. It did not catch the blow off top, and this wouldn't even be really a blow off top when this occurs, right? So this is to me totally invalid, and I've got it on my chart because I know people are going to ask about it. The other reason I think it's invalid is this. I've been talking a lot about the 120-day and the 50-day. We've been so far detached from the 120-day, and the reason we're so far detached from the 120-day is the money printer, inflation. This is asset inflation causing this correlation to break. This used to be a really good indicator, and it used to come back to touch this. It still very well might. When all the kind of everything's leveled off with all the money printing and asset inflation, maybe even this next parabolic kind of the pseudo parabolic move we have might take us back. But right now we've been touching the 50-day, touch of the 50-day, touch of the 50-day, and we've been staying above it. So as long as we're above the 50-day, I'm gonna use the 50-day as if it was the 120-day, and I'll be measuring separation, yada yada yada, and just to kind of get a gauge of where we are. And right now we're totally healthy. We've been consolidating, and we're looking to really ramp up here. When we get below the 50-day is when I'll be like, all right, I need to shave some as we confirm down out of here and buy back as we touch the 120. It's another thing to potentially play. But as for now, the pi cycle cross is totally invalidated by the fact that it crossed during consolidation. Like I said, when you saw that right there, it crossed right there. It crossed in the middle of this consolidation right here. It was not even a new all-time high when it crossed. Invalid. Yeah, pi cycle hit on ETH a month ago, yeah. Well, I mean, the pi cycle was developed for Bitcoin, but you know, it's the asset inflation that's going on with the macroeconomic, the easy monetary policy, yada yada yada. That's going to break a lot of indicators. That's just the way it works. Riot 15% off sale. Hey Thomas, you know, I'm not a fan of buying the miners at this stage in the game. Historically, they've underperformed from here on out. Now, I was wrong. They have performed better than I expected. I had a lot. I mean, I had a lot of Riot and Mara early on, and then I did some research and went, oh, you know what? These things kind of, it's going to be really hard to capture the spikes because they don't necessarily spike exactly as you think they might based on the Bitcoin chart. Like if I throw up here. BTC, USD, and then they lag. As Bitcoin, they'll sell off hard as Bitcoin consolidates, and then they'll underperform. That's kind of what happens. So you see here, we made a move. We had a big move right here. It was kind of unexpected, relatively speaking. And since then, right, Bitcoin's, you know, has been kind of slowly inching up and consolidating, and it's been selling off during consolidation. Now, Riot, to your point, this is a beautiful consolidation on Riot itself as a potential asset. So, or just looking at the chart on it. So, I'm not playing it just because, you know, I've got all my money in actual crypto for the most part and on crypto exchanges. But I would be a little bit leery about these crypto miners underperforming actual Bitcoin the rest of the way. Now, I could be wrong. That's the way it happened last cycle, and what happened last cycle does not have to happen this cycle. So that's the other thing. So this is my general, you know, warning on that. And let me illustrate it this way on that topic real fast. Look at my long-term BLX chart. I've showed this before. I just want to show it now, just for everybody who's watching. If you look at the miners, I want to show what happened last cycle, just so y'all have it clearly fixed in mind. I'm gonna go to, no, I can't do log because I just broke my chart now again, darn it. Let's get rid of this and put it back on. Nope, I have to. What I'm gonna have to do is add it fresh when I get over here. Right. Okay, just real fast. I need to get back to talking about what we came to talk about, actually. So I'm gonna just do that. Let's do this real fast, and then we're gonna get back to talking about markets. What I want to explain is the order book and how markets actually work. I think there's some big misconception. All right, so this is last cycle, right? And so what you see with Riot, and then it may be that the market didn't have a good understanding of crypto miners either, and this is going to be wickedly incorrect, unfortunately. What is going on with this? All right, well, I don't know if I can't really get a good picture of this. Is that the right? Basically what happened is Riot kind of peaked randomly early on. It had this huge spike early on, and then it basically underperformed the rest of the way. Let me get rid of percentage here and just do like the dollar. Yeah, it's not going to help at all. But it underperformed Bitcoin. By the time it was all said and done, I believe from the beginning of the cycle to the end, yeah, Riot ended up underperforming. There were times it was greatly outperforming Bitcoin, and then as Bitcoin consolidated, it would sell off back to its prior levels, like before the spike happened, and then it would spike kind of randomly and under. So this is the long term. This is from the halving all the way through the full market cycle. You see Riot made a 922% increase, which is still a great return. I mean, but Bitcoin did a 3,368%. That's last cycle. Just know that it may underperform the rest of the way, and it certainly doesn't have to though. So, all right, comments. Oh, let's talk about how the market works. This is something that came up So the comment was made a couple of times that because Bitcoin crossed over $1 trillion market cap, then that the explosive upside moves would either slow down or stop. And I think the idea was that they would slow down, which is it's fair. It's a fair assessment to make. The one thing to keep in mind about Bitcoin that people need to understand is this is not an equity or a commodity that is bound by traditional valuation metrics. So equities have all kinds of valuation metrics, right? Their book value, their earnings, their forward earnings, potential, so forth and so on. And for the most part, they're constrained to what they can produce within those metrics. Commodities are the same way. Commodities are very much, oil is a great example. Oil's, it's a supply-demand ratio, and it's really the cost of production, and there's some other things that go involved there. But oil really costs, whatever the last drop of oil that's in demand is, the next barrel produced, that last barrel produced, the next barrel produced, whatever after it should be roughly the cost of it. It's on a fundamental level how it should work. It doesn't actually work that way, but you get the idea, right? So at any given interval in time, whatever it costs, whatever the cost basis is to produce the amount of oil needed to meet the global supply is roughly, with a little bit of markup, is roughly what the price of oil should be, right? So anyway, there's ways of evaluating commodities. There's ways of putting valuations on equities, and they're constrained mostly to those. Bitcoin is not an equity and it's not a commodity. It is an asset class, and as such, its valuation can change drastically much faster as the market comes to an understanding and equilibrium around what this asset is. So, for example, if tomorrow morning everybody in the world just wakes up and we miraculously telepathically link up and we all agree, you know what, Bitcoin is superior to gold. Well, Bitcoin would quit trading at $62,000 and it would jump almost 10x and would probably trade around $500,000, at least roughly at a $10 trillion market cap, because that's gold's market cap, roughly, right? So we would instantaneously teleport price from here 10x, because the market, everybody came to an agreement that Bitcoin is a store of value that is superior to gold, and therefore should trade at least at gold's value and probably a little bit of a premium to it, right? All right. Now, if the next day, everybody in the world, same thing happened, we all had a light bulb moment, everybody woke up and said, you know what, Bitcoin is the superior global reserve currency. Well, we would teleport its market cap from $10 trillion to say something ridiculous like a quadrillion dollars or something. Derivatives market makes it the real financial markets in a few $100 trillion. So it would jump from 10 to maybe $100 trillion or so, or more. And so that's why Bitcoin as an asset class can move much bigger than an equity or a commodity, and that's why it's not fair to say because it's got a bigger market cap now that things are going to change. No, as long as the market is still adjusting to this radically new asset class, and as long as market participants are being forced into awareness around it. So, for example, when Tesla bought recently, and this was the example I used. Okay, if it's going to slow down in its explosive moves because we've hit $1 trillion market cap, explain this to me. Explain why, when it was nearing $1 trillion market cap, not quite $1 trillion market cap, in a single day from, let's just say opening to close, let's be fair, from opening to close, it had a nearly 20% move in one single day. Well, why did it move that much? It moved that much because Tesla announced they had added Bitcoin to their balance sheet. What did that do? Did Tesla go buy? That moved the market cap, that 20%, say it moved the market cap $200 billion. Did Tesla on that day buy $200 billion? No. Did the market buy? No. It's not that the market bought $200 billion. It's not how the market works. It's that all the participants in the market came to this realization that Bitcoin is at least a little bit more viable as a currency and or a store of value than they thought. And so then the perceived valuation of the market very quickly normalized around that. Sellers were not willing to sell anymore at $39,000 because they knew that buyers and themselves, they understood that this asset was worth more because it's a more viable as a currency, and so did buyers, and so the market very quickly normalized around a new paradigm up here in the high 40s, right? And then it kept that impulse that the market kept adjusting to that, and we finally reached a peak valuation before consolidating of 58,000. So that announcement sent Bitcoin roughly from 40, high 30s to the high 50s, right? So that's why Bitcoin. But if tomorrow, another example, if tomorrow Apple came out and said, you know what, all this buying pressure you guys have been seeing in the order book, that was Apple buying up, and they moved their entire reserve of what, $200 billion of fiat currencies they hold, I believe, something crazy like that, equivalent. They moved all of that to Bitcoin. What do you think is going to happen to the price of Bitcoin tomorrow? Like, Apple's already bought the Bitcoin, right? The price is going to instantly jump to over 100,000 or something crazy, 100, maybe up to 100,000, like in a very short period of time, in just a couple of days, as the market digests and rallies around that information. And so that's how price can move very quickly. Why can it move that quickly? Are that many buyers required to move the price? No. Buyers are not required to move the price. It can be a confluence of supply and demand. So there's two sides to it. So when you get a big announcement like Tesla adding Bitcoin to the balance sheet, you have two things. You're going to have a lot of fresh buyers coming in, but sellers are no longer willing to sell at this price. Sellers are going to want to get more for the asset they hold because the asset has just gone up in value. Same thing. Tomorrow, if Apple were to announce that they bought $200 billion worth, they've already bought it, but it drastically changes the viability of this asset class. And sellers would not be willing to sell at 62,000, and buyers would be willing to buy much higher than 62,000. So the market would figure out what a new equilibrium is around that. That's how the market works. So at a core principle level, the price of any given thing in the market, any instrument, what it is it's the last trade made on that asset times the number of whatever that is. So, for example, if Say, a small stock that got really illiquid. Say, I don't know, Square. These are all pretty big liquid stocks I got on here. I don't trade anything that's illiquid, so I don't know. But say trading basically just came to a halt on Polkadot tomorrow. I'll just pick on Polkadot here. So Polkadot, this is, by the way, we just got a CTM entry on Polkadot, 12-hour right there. Where's your CTM entry? Potentially. I mean, it might be invalidated. You might be a little cautious because that big old wick down there way below kind of might have invalidated it. But nonetheless, Polkadot's looking good. If for some reason all exchanges froze trading on Polkadot, for whatever reason, right? And something drastically happened with it, either good or bad. The next day that this thing starts trading, if it just stopped trading and nobody was willing to buy, nobody was willing to sell, both sides just dried up. And, Polkadot went through a major upgrade and was a fantastic thing. It's taken over Ethereum, whatever. But there's no liquidity. There's no buyers. There's no sellers. At some point, buyers would keep putting bids in. Buyers would keep increasing their bid, searching for a seller who's willing to part with their Polkadot. And it might take, it could go all the way up to $500, whatever, right? So say at $195, somebody's hanging out on Polkadot goes, you know what? Polkadot's going to take over Ethereum. They're going to take over the world, and they're going to be, blah, 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 blah. But if I sell my Polkadot now that I bought for $5 at $195, I can go buy me a Lambo. Somebody somewhere, there's going to be a price at some point. Some seller is willing to sell, and that is the new price, right? That is the new price. The very first transaction. The very first time DOT is moved after that halting and nobody's buying or selling, then trading would resume at right around 195. And then somebody else would be like, you know what? I think I want to buy me a Lambo too. I'm going to go ahead and sell. And I'm willing to sell for 194 because I can still get me a Lambo. And then boom, the market does its thing. That's how the market works. It is not, you do not need an X amount of dollars flowing into an asset to make it go up or down. It is a combination of buyers willing to buy and sellers willing to sell. Where they meet in the middle is the price. All right, that was I wanted to make sure we got that explanation out there. Please let me know in the comments if that was not clearly explained or if you guys disagree with that in any way. Let's go to comments and let's just free flow now from here on out. Coinbase won't affect Bitcoin. I agree. Minogue Johnson, I agree. That's This whole Coinbase thing is irrelevant. Just forget it. Ignore it ever happened. Coinbase employees who got they're cashing out their Coinbase IPO to go buy real Bitcoin probably right now. Please do an analysis on Aave. Yes, Aave looking great. I had an alert go off earlier on Aave, by the way. I had an alert go off on Aave. I moved it to the top of my list. There's right there. Yep, I had an alert go off here. This is Bitcoin. Where's Aave USD? USD. Yeah, I had an alert go off because it triggered. So yep, now I'm watching. So what I told myself is I didn't want to play this initial breakout, although I should have. Or I might have missed it, I'm not sure. But I'm looking to put a trade on when we broke this level right here. Yeah, I didn't want to play this breakout because we'd fallen back into it. I wanted to wait until we cleared this area. So now I'm waiting to see. I got my alert here. This was a level I was looking to close. Go to the daily. I had my alert set at the top. This closing price and opening price of those daily candles right there, which is 420.30 something. So I got my alert. Now I'm watching. Now I'm watching here for a 12-hour entry. So I had a breakout of that level. If I get a retest of 420 and then a resumption, my resumption level would be 428. This is not financial advice. Van by the river. I will be putting a trade on right there. All right, that's Aave. I love it. Good evening, Rigel. I'm way back on comments. Elliot says Van River. Pi Cycle 8th month ago. Brad. I'm Brandon. I don't know if you're talking to somebody else in the chat. If you said Brad comments, I don't know if you mean me, Brandon, or somebody else in the chat. I'm just going to read your comment though. Had difficulty finding a good exchange to show liquidation levels. Kraken does not show it. May you share your experiences that have used the liquidation levels. I'm going to be honest with you, Carlos. My liquidation level is probably like $15,000 Bitcoin based on how I do things. So I don't pay close attention. KuCoin makes it pretty obvious on the mobile app. I just happened to notice that it said, hey, your liquidation level is this dollar amount. So KuCoin makes it pretty obvious. The way Kraken displays it is it shows you your margin level, your margin percentage level, and it kind of gives you like a little bar. Basically shows you how much margin you have available. So as that moves along that bar, I'm nowhere ever near like in danger, so I don't watch it, to be honest with you. But yeah, there's some little bar that you can kind of look at, and they just give you some indicator there. And it doesn't say a dollar amount as your liquidation level. It just kind of shows you, how on the edge you are, as far as I know. Like I said, I've never been more than halfway on that little bar, so I don't really care a whole lot. All right. I think I use cross margin. Yeah, I'm pretty much probably mostly in cross margin. That's why I take higher. That's why I take the max leverage on any one instrument so that I can stagger in other trades, whether they be like I was watching Litecoin, Bitcoin for a short, right? So I want to be able to use my margin with exposing minimal Bitcoin to the exchange. I want to be able to use that same equity and take a long or a short on multiple instruments. So I do mostly, but I'm also not like using like the main difference as far as I know between cross and isolated margin is that isolated margin will liquidate a single position when it reaches its liquidation level versus like I don't play the liquidation game. I'm like if I ever get liquidated, something's broken with the exchange, right? It's not how I trade, so it doesn't really affect me a whole lot, so I don't really think about it. I'm watching tonight while camped down by the river. I swear this music I have on makes it sound like somebody's pulling a squeaky wagon or something. So I'm gonna flip the music I'm listening to. I'm gonna listen to some 80s retro synthwave over here. I can't play this for you guys because it's like copyright music, whatever, but I can listen to it. All right, back to comments. Berlin hard fork E3100 end of April. Thomas, the Berlin hard fork. That's the one that's now, right? Let me just hold on. That's the one that we're doing right now, right? Berlin hard fork. Yeah. As far as I know, yeah. This hard fork only has 4. There's only 4 EIPs in it, and EIP 1559 is not included in it. So the 2 EIPs, there's 2 that change. That are modify the core gas fee. So one reduces gas fees for certain functions, another one increases, I think, gas fees slightly for a different type of function, a memory utilization function. And then there's 2 additional features that are added in this Berlin hard fork. But it's not It's not a huge hard fork as far as I can tell. It might help a little bit with some of the base gas fees, and it also provides developers some new mechanisms to try to manage gas fees better, or what they ultimately end up paying in Gwei for gas fees. But it doesn't seem, it's not, EIP 1559 is not included in this hard fork, so that's the big one that everybody's kind of waiting for, that'll really rein in gas fees, because it's gonna and make EIP 1559 is really important for traders and investors because it's going to make ETH deflationary, which should obviously help its price significantly. So that's not in Berlin. So I don't know this. That's why we're getting a pump. Oh, I got my Bitcoin things on this chart. That's why we're getting this pump right here. Probably a little bit more than Bitcoin broke out too, right? So Bitcoin breakout plus Berlin hard fork. But again, it's not like there's bigger upgrades to come. Are you shaving your leverage or hodl at those price targets, Brent? What I do, very simply, and guys, using CTN methodologies, we've absolutely killed it. So I took long entries coming into here, and starting in December, I had long entries on Bitcoin, and I sold, I didn't maybe get to probably the top, but I sold through here. And what I did is I take those trade profits. So when you're trading on Kraken, my base account is Bitcoin. So I have Bitcoin on Kraken, and I take either, if I trade, my crosspair is the quote currency, whatever the currency on the right side. That currency is if it's Bitcoin, then I get paid out in Bitcoin. So if I gain Bitcoin in the trade, I just get more Bitcoin added to my stack. But if it's a USD pair, I will get paid out in USD. So then I take that USD and I save that USD and I buy the dips. So I've done that like 3 or 4 times now. So I've taken profitable trades, profit here, bought the dip here with those profits. Took trade profits. I'm not even sure. I probably, and I rebuilt my position, all through here, through all this consolidation, right? Somewhere in here I rebuilt. And I took profits, probably in here somewhere. I don't know exactly where, and I bought this dip. And same thing here. I don't know exactly where I took profits. Was this the one? This is the one I called really close. Yeah, this one I got perfect. This one I got about as perfectly as you could get. I literally took profits right here. On Bitcoin and altcoins. And then I bought it. My major buy was 47,000 on the way down here. I deployed most of my capital at 47,000, and then rebuilt those positions as we came out of that here. And then I did take some profits here. I think I had some losing trades. My first couple of losing trades were in this consolidation. It's kind of fake out because we didn't know if it was going to go back up. I re-entered some positions. I think I did maybe eat a stop or two in here somewhere. So that's how I do it though. I try to build trades after we've sold off, and as we start to resume upward, I start to layer back in and get back fully positioned. And then when we go parabolic, when I see big moves like this, I'll probably take some profit. I probably would have taken some profit here and then re-entered as we came out of it. Rebuilt my position and take some more. I think that's what I did. I think I took profits here and then rebuilt, took profits up here, bought back, whatever. So I'll do the same thing now, right? So I've been rebuilding all through since here. I've been rebuilding my leverage position. I've got about 80% of it rebuilt, and I'm waiting for the entry signals post breakout here to build my last 20% up. Okay, and then when we make this next move up, this next impulse up, or if we come back down, I hit my stop loss. It'll be some losses. There'll be some small. The idea is you want small losses, big wins. So my losses are going to be really small now because I'm well into profit right now. Obviously, I'm not taking profit. I'm looking to add to my trade, but I'll take a small loss if we unexpectedly sell off. But in theory, if we consolidate here and get our resumption signal when I enter my last 20%, then I'll look to sell at these whatever these levels are. Shave some there. Maybe buy back if we look like we're resuming, and then ultimately exit after probably, it's about a 30% move up. That's when I start to really exit my position. So like Link, the only one I've taken profit on is Link. I took profit on Link coming to this trend line right here. That was about a 40% move on my trade. So I got about it was about 40. That trade was 40% in profit. I took 50% off coming into that trend line, and I had entered it. I don't even know, down here somewhere. when we came off of this and I saw resumption off of this, I entered the trade down here, I think in 2 parts. And then I just took, right there's that big parabolic move like that. That's when I take profit. I see things go parabolic. I took 50% off here. And I'll watch it. Maybe I'll take, depending on price action, if we just consolidate here and we're going to, say we build a bull flag and we resume up, then I'll re-enter. If we break out, we'd have to really break out the top side of this. Like I'd have to see us break the top side of this, and then definitely I'd re-enter that 50% that I'd already sold. You know, that'll be insurance cost, right? So I will have, maybe sold here and bought back, up here. So for 50% of my trade, I'll have lost a little bit there, but that's basically, in my book, insurance, which is fine. Or if we come back down, right, if we get resumption coming into this level, what I'm looking for on the other side is I'm looking for, a resumption down. So if I see something more than like a bull flag developing, I see an actual breakdown pattern, then I'll go ahead and exit the rest of it and then wait for it to repair to re-enter. Again in profit because I entered way down here. That's just kind of how I do it, right? And I probably should have taken the whole 100% off. I literally was busy, and I went to look at, like, man, this is up a lot. I need to go look at this, and I just saw this, touch, drew a trend line there, and went, yeah, oh, there we go, boom. I'm taking 50% off, and I'll come back and look at it later. That's how I do it. So, again, when Bitcoin, this trend line, let's just see here. This chart, I'm just going to do something real fast. I just want to do something. Why does my Coinbase feed, stinking. This is what annoys me sometimes about TradingView, but I'll make this as parallel as I can get it for now. Do we have a channel yeah, so we got a pretty good channel. There you go. So yeah, we can come to the top of this channel. So if we break out here, as soon as we touch the top of this channel, I'll be exiting my trades. All right, that's what I'm looking for. I'm looking for a move from the bottom of this channel. Building positions as we consolidate and then resume, so resumption out of those consolidations. You can see here, very zoomed out, it's a bunch of little consolidations and then resumptions out. And then, so I'll be fully built after we get our next, resumption signals in this consolidation we have here. And basically, I'll be looking to sell at the top of this channel, or, obviously, you had this little price action here. I'll probably take some off coming into, this midpoint of that channel. You guys get the idea. That's how I do it. And then I'll be looking to buy the next 30% dip. I'll have fresh buy the dip funds. I'll buy the dip, 30% dip, and rinse and repeat. And the numbers starts to get really, really big and daunting. I'm at the point now where I'm looking at if I fail miserably and I just hold what I've built up to the end, it's going to be pretty big numbers, bigger than I thought I'd make this year for sure. And if we continue to execute like we have been in here, the numbers are going to be so astoundingly big, I don't know what I'm going to do with myself, but we just keep executing and we'll worry about that later. All right, moving on. I hope that answered that question. I got a bunch of people calling me Brad. Are y'all talking to each other? I'm trying to figure out. I'm Brandon, by the way, not Brad. So I don't know if y'all talking to each other or what. So I got, is the exit of GBTC and ETH going to be different than BTC? Maybe a Jordan question. Thanks, John. You always defer to Jordan. He's more of the veteran than I am. On this question though, I can definitively say no. The GBT exit and the BTC exit are going to be very similar. You're going to want to. I will say this. It will be slightly different. You want to get out of GBTC earlier. Because if you're waiting for the dead cat bounce, the premium is going to dry up after the big sell-off. The dead cat bounce is not going to give you a big premium spike like you're going to have at the blow-off top. So GBTC, it's actually a little bit more important to go ahead and get out on the initial parabolic top. Again, if you wait for that bear market sell, the first big bear market sell-off and then the bounce, your premium is not going to be, it's going to collapse a lot on you, and it's not going to be nearly as big as it was at the blow-off top. And so you're going to end up losing more than just so. Say the blow-off top goes up to 200,000 as a rough number, and then it sells off, has a big 50% sell-off back to 100,000, and it bounces back up to 150,000, which is your second the second best way to exit Bitcoin that you're actually holding. The problem is GBT's price will have dropped more than whatever the percentage of 20 200,000 to 150,000, was it 25%? It'll have dropped more than that because of the premium collapse. So it's going to be a little bit more important to get out of GBTC earlier than actual Bitcoin. Hive. I love Hive. Hive is great. Hive is my favorite of the miners. Yes, thank you for bringing that up, Mario. If you're going to buy and hold up a miner, take a look at. Do I have it on my list? I don't even have it on my list. That's pretty bad. They're the only one I hold. This is the only Bitcoin miner that I hold. And I bought it OTC right here. On the OTC markets, though. Hive blockchain. The reason I like Hive, it's very simple. In Bitcoin mining, the name of the game is operational cost and operational uptime. And there's two major costs. There's really three major costs with Bitcoin mining. We'll just distill it down to two. We'll just make it two simple ones. There's two costs. One is the capital expense of the miners themselves. So the miners, the capex of the miners, right? And that's fixed. Everybody has roughly the same capex cost. There's no real difference there, other than if you can maybe negotiate a bigger purchase. But all these guys are purchasing in bulk and getting about the same price. Two, it's your operational expense, namely electricity. Electricity is number one, and then secondarily to that is cooling. But cooling usually costs money because it's burning electricity. So it's really your electricity costs, right? And then things like the cost of the building you're in and so forth and so on. There are some other ancillary costs, but this is like 90% of the deal. 90% of your cost is electricity, and the name of the game really is being able to have that miner to produce enough Bitcoin after paying off the electricity, that it pays off the capital expense of the miner, and then it still has some life left at your electricity cost to continue mining Bitcoin that are now in profit. You've paid off the capital expense of the device, and you've been able to pay your electricity, and now you're running a miner that you've paid for, and it should have maybe another year or two of life before it's not profitable to run because electric costs more than how much it's producing a Bitcoin, and that is really your profit. So the lower the electricity cost, the faster you pay off your capital, and secondarily, the longer you can run that miner profitably before you have to decommission it. So that's the name of the game. And Hive builds their mining facilities north of the Arctic Circle by hydroelectric dams. So hydroelectric, last I checked, is the cheapest form of energy known to man. It's the easiest way to produce electricity in bulk that I think, last I checked on it. Nuclear is more expensive, wind, solar, all those are vastly more expensive, coal is more expensive, so forth and so on. So what they do is they find a dam, a body of water with some hydroelectric power. They build a shack, a really fancy shack next to it, put a bunch of miners in it, and they have free cooling and the cheapest electricity, and so they're super profitable because of that. So that's a simple explanation of why I like Hive. Okay, moving on. This is not financial advice. Van by the river. Where's my van at? Van by the river. Okay, moving on. I'm gonna go to the end now and come back up because you guys probably. I'm drinking wine. I'm sorry, guys. I forgot to. This is I got a nice glass of. I don't know what it is. Some wine that my wife's winery makes. It's good. It's a blend, I think. It's a pretty high-end-ish one for them. I don't know what it's a blend of. I'm gonna guess Cab Franc, maybe based. Who knows? It's wine. Let's go to the end here. Thanks, Brandon. Here, appreciate it, Ben. Cards. Brandon, great explanation about taking profits. I'm newer to CTM and I'm just buying and holding to the top, listening and learning. Great. No, you'll do well. You'll do great. And then you'll have some great funds to fund your trading account moving forward. No problem. Cross margin has been warned against by Heath, experts only. Okay, thanks, Path. I appreciate that. If Heath warns against... if Heath warns against cross margin, there's some good reason for it. I think that's how all my accounts are set up. But I will tell you, in my case, I am super, conservative with how I'm using leverage, right? So I'm using it super lightly. My stop losses are way, way above any sort of liquidation level. So I don't worry about it just because that's not how I trade. But yeah, be super careful apparently if you're using cross leverage. I guess it can cause you more harm. Experts only. Any thoughts on the Helium project? Yeah, I looked at it. I don't remember. Hold on. I've looked at Helium before. I don't remember exactly what the... Oh, it's an IoT one. They're focused on IoT. This is a good space to focus on. Anytime you see this, it could be marketing fluff because it's a good space to attach yourself to. But this is going to be a big need and a big driver. This is all the the connected devices. So, and this is like super. This is everybody at their house. You guys all have Ring doorbells and probably microwaves and coffee pots and who knows what else connected to your network now, right? Smart lights, smart this, smart that. That's what this is. But on the industrial side, that's where the money is. This is like, so in, say, oil and gas production today, you've got guys walking around with clipboards reading meters of, the well pressure or the whatever, right? And they're taking, at every couple hours, they go check all these instruments, and then they put it on a clipboard, and they go back and they put all this data in a computer somewhere or something manually. And so now what IoT they're starting to do is they're starting to take, and you're enabling these sensors with IP enabling sensors. So IP is the protocol that you use to connect to the internet, basically. And so they're IP enabling these sensors, and so that these sensors can then talk to a central point, and then that way they can report in real time. They can be regularly, by the minute, by the hour, whatever you want, right? But as low as by the minute, by the second even, what their readings are. So it gives a lot higher accuracy to the reading of these devices, which allows these businesses to fine tune these things, which ultimately creates more profits. So it's a good space to be in, and there's a lot of devices coming online, and there's a need for these really like micro transactions related to this. So Helium mainnet allows low-powered wireless devices to communicate with each other. Is Helium the this is the wireless thing? Yeah, okay. Is Helium basically the decentralized Verizon or something? Honey Badger, Byzantine, fault tolerance, working by Helium. Let me what? I explained IoT just to make sure people understand it. Yeah, this is the wireless thing. The problem I have with this is a couple of things. It's tied to a capital asset, so you have to have this little radio, and your radio is basically, and then the airwaves that you provide is your stake in the network, like proof of stake, but with like a physical asset. The problem is it's tied to a capital asset, and because it's tied to these capital assets, these little actual antennas, there was something, I did some digging on this, and there was some, there was a couple of thoughts that I had, and I'll have to stop and think about it. I'm impressed by the technology and the ecosystem and what they're trying to build, and I think it's cool. I think it's useful, but as far as its market potential, I couldn't get a good read on. And again, because it's tied back to this capital asset, for some reason I came to the conclusion, I can't remember what it is now, that this was a big time negative, but my brain's not working good enough to think of why. So but that's my initial impression of it. I wish I had if I could remember the research I did when I did some deeper digging on this. There were some drawbacks. There were some drawbacks somewhere that I came across. I can't remember them right now. All right, what's your take on funding, fees, margin interest on highest leverage? Count for this in your... So, guys, I'm going to refrain from talking anymore about margin and margin trading because I wanted to explain the basics of it because I was asked about it. I am not, a expert at managing margin accounts. I use them so very lightly that I'm well within any sort of concern levels or anything. So I understand the mechanics of how they work. The big thing about margin, understand this other thing, to your question, interest on highest leverage fees, how do you count for this in your exit strategy? Riggin, I said I was going to refrain. I'm going to answer this one because this is a good question. This is a really good question. I kind of misinterpreted the question when I first read it. So Riggins asking, what's your take on funding fees, margin interest on high-ish leverage? How do you account for this in your exit strategy? I'm going to answer this, not the high leverage part. I don't want to get into. I wish you guys would. Well, it's up to you. These are your accounts. This is totally your decision. I'm not trying to tell anybody what to do, but be very careful using leverage, and especially high leverage. I would not put yourself in a high leverage situation, right? I don't do that. But to answer the question about my take on margin interest and fees, I do exit my trades that are on margin faster because of the fees, right? Anytime I think we're going to consolidate, basically anytime, so like Link, for example, again, I sold here for two reasons. One, we're coming into resistance, and it's just a smart place to trim some. Two, I expect us to consolidate, at least consolidate under this resistance before breaking out again, in which I'll re-enter on the other side. I want to lighten up, if not totally exit this trade. At this point, yeah. So I want to lighten up this trade. I was going to say it that way because I want to be paying less margin interest while I'm holding the rest of this. I don't want to sell out of this particular one because I expect Bitcoin, the asset that all these are tracking, to break out pretty big here, which is going to cause alts to break through resistances really fast with very short periods of consolidation. So if I wasn't expecting Bitcoin to break out, I would be 100% out of Link right here because I would expect it to consolidate, at least at worst, consolidate under here, and I don't want to be paying interest on margin fees and or interest while it's doing that. I want to be out, take my profits, and then re-enter when it breaks out of this level. But in this specific case, I'm going to probably stick with 50% off because I do expect Bitcoin to drag this thing up and pull it out of this resistance sooner than it would have otherwise, if that makes sense. But yes, I am much faster about selling my leveraged positions because of the margin, the interest fees, really, interest charges. All right, Joseph, you're welcome. Thank you. Do you think ETH continues to outperform Bitcoin even when Bitcoin... No, I don't, David. See my other videos. I have a bunch of other videos. I've talked about this a lot. Maybe the video entitled something Mega Update. Hold on, let me go find your channel. And then videos. It's called the... Yeah, this DOT video where I talk about DOT could reach a peak of 3,000% total gains from market cycle beginning till now, and then the Mega Update. This one I talk about that a lot. I think I talk about ADA and stuff like that, but I talk about exactly what you're asking about in these couple of videos and a few other live sessions I've done about ETH. I think ETH will maybe keep up parity, but probably lose a little bit. And most altcoins, the Bitcoin's going to suck the life out of everything. I think even maybe equities and some commodities like gold and silver could actually be mildly affected. I don't expect them to have any big sell-off or anything, but I think they're going to have a harder time appreciating while so much money is flowing into Bitcoin and so much attention to be paid to Bitcoin. But nonetheless, I do expect Bitcoin to especially suck the life out of the alts, in that the alts will still be moving up. Don't hear what I'm not saying, I guess. The alts will be moving up because that tide is gonna raise all boats. But if Bitcoin's going up, doubling, alts might go up 50%, right? So or something along those lines. So alts will probably underperform relative to Bitcoin as Bitcoin's making its big blow off top. Now, when Bitcoin makes its blow off top and then sells off, a lot of those funds are going to rotate into alts, and alts are probably going to go just stupid, crazy, ballistic after that for a very short period of time. Then they'll, obviously Bitcoin's going to drag everything back down with it. I expect this next move that we have will be it. The music is going to stop on the altcoin party after this next move. So what's going to happen, most likely, Van by the River, not financial advice, most likely when we break out here, altcoins are going to go absolutely ballistic, and they're going to have a short-term blow off top. And Bitcoin's going to make a really strong move up and hit resistance. When Bitcoin hits resistance and sells off 30, maybe 40% even, after this next big leg up, altcoins are going to sell off 50 or 60%, and it's going to take them the rest of the summer to recover. And they'll be dragged up as Bitcoin makes its big parabolic move, and they'll eventually have recovered by the time Bitcoin's going in its parabolic phase, and they'll probably overtake these levels. But Bitcoin will have moved up 3 or 4x, and altcoins will be just now getting back to these levels, right, or retaking these levels. And that's when, as Bitcoin does this blow off top, altcoins have retaken these levels. These levels we see now, or we're about to see anyway, will be the new support levels. Then they're going to have a ballistic pop, and then they'll all fade too. So, you know, that's what I expect to happen. Doesn't have to happen, like the thing with the miners. It's better to follow the charts and be in tune with what's going on with the charts. That's just what I expect to play out. Path, yeah. Path, enter dot. Path, did you just enter dot for the first time? Or did you just enter just a fresh trade on dot? So that I did, yeah. Did you hear me say that we had a 12-hour CTM signal right there? Not financial advice. While I sip my wine, I can look at Boneholder and Doge. All right. What's a good entry for Doge? I'm planning on holding it for at least a year. Kevin, it's your money. Do what you want. I would not buy Doge to hold. You're going to be probably well underwater a year from now if you do that. My opinion. You know, do what you want. Let's go look at Doge. We'll trade Doge though. Doge has got quite the following, and so fair enough. I will look at it and I will trade it. It's not on my chart currently. I missed the last move. I'm going to put it on my chart to be a good student of what I say. Wait, is Doge not available on KuCoin? I mean on Kraken or KuCoin? Hold on. I thought I could trade it on one of my two. I can't buy. Oh, then I can't even trade Doge, so there's no point. All right, let me just throw Doge on here though, just so I can talk about it for you guys that are in it. Bittrex has it. Okay, whatever. All right, Doge USD. Yeah, so this is a beautiful, huge move. I missed the trade. Yeah, I can't really trade it, I guess. Apparently, if it's not on Kraken or KuCoin. It's not on Kraken, I knew that, but I thought it might be on KuCoin. I don't know. If it's not on any of my exchanges, I can't, I'm not going to be trading it, so whatever. Yeah, so that was your last little bit of consolidation. That was a nice little signal out of there. The signal I would have wanted to take, yeah, that's a good signal because you had this little support right here you came in and touched. Up here, this is time to take profit. See what happened right here? Either these two peaks, it's going to consolidate and then give you new fresh entries lower, most likely. The odds are that you're going to have something that looks like this, right? And the consolidation, and then it's going to repair itself, and then you're going to have a beautiful entry like we had right here to play that next move. So the odds are, let me draw this for you, and I'm gonna try something. I did this on BNB the other day, and I was like, looks pretty good. Let's try it on Doge. So I don't want to talk bad about Doge. I mean, I'm gonna tell you right now, Doge is just for technology speaking. If you don't know this, I think a lot less people know this than I may think that they do. Doge is a fork of Litecoin, and I don't think Litecoin has much of a long-term future. It's got enough following, and it's got enough places that it can be bought that it's. I take trades on it. I trade it. Try to find a good pattern, whatever. Let's just draw like this. What was that consolidation, man? Remember, I'm just going to draw this upper level. Most likely what's going to happen is... I'm going to put this down here. Do this. Let's see if this works. I don't know. Yeah, I don't think that's kind of too wide of a range. Most likely, though, you're going to get a consolidation that looks something like, you know, this what you had here, right? That's my point. My point is this should consolidate here for a while, probably do something like this, and maybe go sideways again, or break out here and resume. I would wait for that. I would take profit if I'm in Doge. I would take profit here. This is one of those exactly what I talked about. Now, if we draw a channel, hold on. Is there any sort of symmetry here I can find? That's pretty parabolic. It's pretty hard. This is like kind of a parabolic move, man. It's all over the place. I'll look at a log chart or something. Yeah, I mean, here let me give you some fib levels. I'm having a hard time with this chart. It's just this is obviously not normal price behavior. I'm just going to stop there. This is not normal price action. This is obviously people getting together, buying an asset, whatever. Yeah, I would take profit here. I'd wait for the consolidation. If you really love Doge and you really want to be in it, wait for the next breakout setup after your consolidation here. I will warn you that we should be, again, we'll be entering the bear market in crypto pretty hard this fall. And things are going to sell off really hard. And I bet you Doge is going to get back to levels that look more like this stuff over here than what you're looking at right now. And maybe by this time next year, you might be looking at something that looks more like a penny or 2 pennies Doge. I could be wrong. It could be 10 cents. I don't know. But that's just what that's a little caution there. Any thoughts on Mana, Decentraland? Decentraland, what was the other one? Decentraland's cool. It's obviously it's that like basically virtual real estate stuff. What was the one that the Winklevoss Sand is it the Sand? The Sandbox. This is what I'm a little more interested in than Decentraland. But Decentraland's kind of the leader as far as I understand. I don't know a lot about this space, to be honest with you, so I'm not going to comment a whole lot. But let's see here. This one's number 70, a market cap of 1.7 billion. There was something. It only has a market cap of 448 million. There was some other reason other than the Sandbox is newer and smaller. Decentraland's kind of the leader. There's some other reason that Sandbox, I forget what it is. I'll have to go find out. Launched in 2011. What? I didn't know it was launched that long ago. Let's look at Mana. Hold on. When was Mana launched? There was some other reason that Sand was kind of interesting. Oh, it just launched just now. It may have been that Sand has been around, Sandbox has been around longer. I don't know. But Decentraland's, look at that, going nuts. Yeah, I don't have a lot of comments on this, just because I missed the boat on this one. It's a part of that kind of pseudo NFT. It's not an NFT. I mean, I guess it kind of is. The virtual land is an NFT of sorts, but yeah, I don't have a lot of thoughts on it other than it's really cool. I don't have time for games anymore, so I'm never gonna like be involved in this too terribly much. What I need to do is I need to wrap my head around what are the competitive advantages. So you hear all these old dinosaurs say, "Well, you could already just make another Bitcoin." Unfortunately, that's exactly what I think when I see Decentraland and the Sandbox. I'm like, but you can always just make another. I don't know what their from a fundamental valuations. The moat. The term would be the moat. What is the moat that protects Decentraland from outside competition? I don't understand that, and so because I haven't got around to understanding that piece of it, I haven't been too terribly interested in it. I've been busy with other things, but it's a really cool space, and I need to understand it. So thank you for asking, because I need to remember to dig into this project. What are your thoughts on it? Put your thoughts on it in chat. I'd like to find out from you. Probably know more about it than I do, that's for sure. KF says, thank you very much for what you're doing for us. Well, thank you, KF. I appreciate that. That makes my day. Oh, no problem, Riggin. What's up, Jack and CTM? Indeed. What do you think about Coinbase? Ison asked what I think about Coinbase. So when I very first got into crypto, I think I signed up for, I think maybe it was Binance. I don't even remember for certainty. Maybe first, and then I did GDAX second. I can't remember if GDAX was second or first. I'm not sure. But GDAX was the one I used predominantly when I very first got started in crypto. GDAX was bought by Coinbase. It became Coinbase Pro. So I have an affinity. I did like GDAX back in the day, but when Coinbase bought them, I just didn't like. What I didn't like about Coinbase was the kind of astronomical fees they charged up front, and I think they're kind of, put it bluntly, they're kind of ripping people off, and they're kind of. I mean, the reason they're the first ones to IPO and they're the biggest in the States is because they kind of, I'll just put it nicely, they cater to political whims a little bit. So I'm not as enamored with them. I don't have a problem with Coinbase per se, and if people like it and you like Coinbase Pro, I think Coinbase Pro is a good platform. I actually, just, you know, I have a Coinbase Pro account and I have a Coinbase account. I actually moved because I've got funds on, you know, like BlockFi and Kraken and KuCoin, and I need to sign up for a Bittrex account and not Bittrex. What was the exchange? Anyway, blinking out. But because I didn't want to put any more of my funds in cold storage on on those exchanges, I actually put my Cardano, because Coinbase, you know, did the Cardano thing. I put 20% of my Cardano off my cold storage. I moved it up to Coinbase to be able to sell it whenever, you know, in preparation for this next big move. And so, you know, I'm even selling Cardano this next big huge move that I expect to be a really big sell-off. I'm going to sell 20% of all my altcoins. So Cardano, Polkadot, Link, Ethereum. I'll be selling roughly 20% across the board. But I put my Cardano on Coinbase Pro just to make sure I had things a little bit spread out. So not that I hate it, but you know, again, I'm trading on leverage, and so KuCoin and Kraken have been fine with me. Now Kraken had that big liquidity thing. Fortunately, I saw that whole thing coming, and I exited. What was that big? This whole big liquidity spike. Well, let's go find ADA. The ADA USD chart on Kraken is ridiculous. There. Yeah, this big spike down. I had exited all my leverage trades, you know, like that night before, like Sunday night, Saturday and Sunday night before this big liquidity event. So I was fortunate that I didn't get caught up in that mess. I think my stop losses probably wouldn't have slipped much anyway, because they would have been like, I don't even know where they would have been. Look at this now. Yeah, because I was taking profit. My stop losses would have been like up here, above any of my, you know, in profit somewhere. Anywho, yeah, I didn't get caught up in that. So, but back to your point though. I mean, so Gemini. That's where I was going with that comment. So Kraken, you know, I can see people wanting to use it over Kraken for sure, but Gemini is the one that I would use if that's the one. That's my preferred. That's my main on ramp, off ramp. My main spot exchange is Gemini. Now, surprisingly, I don't have a lot of funds on there because I don't leave money on exchanges, and I'm not using it for active trading. So it's just my primary on ramp, off ramp. And if I'm going to do like a few, you know, transactions here or there between Ethereum or Bitcoin or whatever, when I sell, you know, my Ether, it'll be probably on Gemini, for example. All right, back to the comments. All right, so I got a nice comment here from Bancy. Thank you, Brandon. You're literally dropping pearls of wisdom, learning by the second from you. You're beyond awesome. Knowing all this, we should not end up in a van by the river. Well, that's the goal. But, you know, we can do all the planning in the world, and unexpected things can happen. So hopefully we don't end up at this point. We're not going to end up in a van by the river. I think the van by the river came from when we were all going all in on Bitcoin way the heck back here at like $10,000. Yeah, I was all in. This little breakout right here, I put the last of my funds in as we broke this. So that would, you know, I don't know. I might have made another couple purchases up here, but I was all in back. This was a lot scarier. Everybody's screaming about it's going to collapse and it's going to close this. There was a CME gap down here. The van by the river was born and bred when we were all freaking out over here. Is this thing, you know, we thought we had broken out and then it fell back down. This was a lot of consternation through here. And then now, you know, if you end up in a van by the river if you've been around with us from the beginning and the gains that we're in now, if you end up in a van by the river, then you have a really nice van and you wanted to be there, which is cool too. It's cool. It's fine. Sounds really good to me, actually, at least for a short term. I have a wife and a 1-year-old, so long-term a van by the river doesn't sound too appealing. But, you know, for a couple of days, it sounds great. All right. But thank you for that nice comment. I appreciate it. E-Gold, cup and handle. By the way, one of that I missed that I should have been talking about more this whole market cycle, guys, and I'll tell you all this. If you are into this, good on you. I did some more digging on E-Gold. It's really, really good. It's not. It's better than Zilica. It's better than Zilica. Like so, Zilica. I had put E-Gold on the same level as like Zil and maybe XRP and like Algorand at that like tier. I think E-Gold and Elrond is a tier above all of those. It's not Polkadot Cardano level, but it's a step up from a lot of these other like projects. So it's kind of in its tier of its own in my book now. I've kind of, the more I dig into it, the more I like it. Now you asked me about E-Gold cup and handle. That's a big cup and is it the Bitcoin chart? You're probably looking at like the USD chart. So you got like a weird looking cup and handle if that's what you're looking at. Really tall handle there. I bet you're talking about the USD, which would make more sense. Yeah, so over here, I mean, it could be forming a cup and handle. It's a big bowl type-ish pattern. I don't look for cup and handles too much, to be honest with you. Yeah, it could end up being one. It's not just, I used to pay attention more to that type of stuff, but really, so take a look at this price action, and you can, with a lot less work than cup and handle, you can go, okay, hold on, 1 second, I'm just gonna look at something. Let's just draw these extreme touches down here. I'm gonna clone this up here real fast. Is there anything here? Yeah. So you kind of broke out of this channel that we're in here. See this lower channel, this upper channel. This is not going to be a super good look actually at it. But the other thing is more important than this kind of channel I'm trying to draw is this level right here, this daily level. You're above this. So if you're wrong thing. If your price action brings you back down, which it kind of did, came pretty close. And the more important daily level, I think, is probably the top of that bearish candle on the recovery. You took that, so you push up into this level. You've got tough resistance, which is basically the reason that was resistance was these dailies over here. Price pushed down. You took that out. You found it a support, so you closed the daily there. You opened. You got sold off. Then you recovered and more. And then the bulls took control. So the bulls have control again now. You're above this. So long way of saying you'll get similar. What's the word I'm looking for? Analysis by just doing more traditional analysis. You don't like looking for a cup and handle might just give you another. Okay, this is basically a long consolidation, right? Period here, and really you've taken out this. The other thing too is look at this. You see the daily? Look at that. Your daily close. Bulls push the price right up into that. That high. I guess that's the all-time high probably on it. 236. And they got rejected there on the daily, and now they're fighting to get back into it. That's going to end up being your handle most likely. You take that level out. I would wait for. You could probably put a small trade on here pretty preemptively, but that's going to be pretty strong resistance for a little bit here. But you take that out, get an entry above that, and it's going to fly. Probably. I mean, it's been pretty good consolidation from over here to over here. You've got early February, yeah. It's a good project, though. I like it, for sure. Do you use Gemini? Yes, I do. Just to try it out, just to be educated about all the different options. I put a small amount of funds on Celsius. I put a little bit of Ether on Celsius just to see the interface and understand it. And I put a little bit of Link on Gemini Earn just to see it and play with it. And I've been getting some rewards, apparently, from it. I haven't really looked at it. But I just have a small amount of my Link on there just to check it out. I wonder if Elon's fart smells like fresh bills. I don't know. He doesn't have an exhaust pipe. All right. Anyway. Now it's an RV by the river. Yeah, I'm literally about to buy an RV, actually, for a YouTube studio, of all things. Yeah, so we're going to build a thing outside, get a nice RV, park it outside for a YouTube studio. But my wife does like lives and stuff, so being able to get out of the How the house would do that would be nice. All right, I had a comment here. Decentraland is cool. I think it may grow big. Players start investing in marketing with Decentraland. Atari is also build a casino, and yeah, Atari is building a casino in Decentraland. That's right. I think I did see that. I wonder if, for instance, Walmart will build a Walmart, or other companies will invest for marketing purposes. But I agree about the moat comment. Okay, yeah, Carlos. Yeah, that's my big. I don't understand. I need to probably dig in. All right, somebody, official guy says, I feel like Decentraland is exactly what you're saying. Seems like everyone who can design half-baked graphical game content overdone. Coinbase stock as an investment. This is not financial advice. Banned by the river. I don't like it. Decentralized exchanges are going to eat Coinbase for lunch. Now, Coinbase won't go out of business, I don't think, because they're going to be they'll have plenty of businesses, an on-ramp, off-ramp, and a very simple exchange, a very simple exchange interface for people that don't want to get very deep in the space. But for anybody who's more serious about it, decentralized exchanges are going to eat the traditional exchanges for lunch. My thoughts on Shift Network. I believe the last time I looked at it, I decided I liked Shift Network, but let me look again. Oh, God, man, so many projects I cannot keep up. Shift Network, developing regulatory compliance for decentralized finance. Yeah, I'm just going to say this. It's been a minute since I've read up on Shift. I actually liked it. I didn't see any red flags with it. Yeah, so this is just a trust-based, so it's building trustless identity, yada yada yada. Yeah, I don't have any strong thoughts on it. I didn't see any red flags when I looked at it anyway. It seemed like a reasonable need in the market. It seemed like a reasonable solution to that need. So yeah, I like it. I mean, it's not like I'm in love with it, but I didn't see any red flags anyway. And it seemed viable. Thoughts on BAT, basic attention token. Let's take a look here. Basic BAT. So, yeah, it's tearing up, isn't it? I was just trying to look at what the market cap is now on it. I think it's a little bit ahead of its skis here. Yeah, it's really like hold on. There was something I'm trying to, for BAT, there's something secondary to the ecosystem that I'm trying to remember that is kind of cool and makes it fairly viable, but the core platform I think is way overvalued right now. What was it? There's something about BAT. I'm trying to remember. I don't know. I can't. I'm gonna have to wrap up, guys. I'm starting to kind of get tired and fade here a little bit. Why can I not remember? I'm just not remembering what I had. My thoughts on this project. Between advertising, there's some market segment that this addresses that's not readily apparent. It's not readily apparent when you kind of read the site at first that I thought was pretty cool. I just can't remember what it is. I'm trying to find it. Sorry, I'm not gonna be able to find it, I don't think. All right, sorry about that. I think BAT's, like, if you look at it, let's look at the chart. This is gonna help me a lot more. It's obviously a viable project. I mean, it's exceptionally viable project, and I don't have a problem with the project. My problem is with the move that we've had. I need to look at it versus BTC is going to be better. You know what? This isn't too bad, actually. I did not realize that versus BTC was just a recovery. This is actually, I'm going to change my tune on that too. So it was a viable project. There's something about it that I liked when I looked into it. I just can't remember. It's not what's readily apparent when you first read about the project, though. I know that much. With the Authenticity token, yada yada stuff that they do, and the linking advertisers to the different ecosystems. But this is kind of neat. So from a technical analysis perspective, obviously we're in a pretty bad downtrend. It's been completely sideways, but versus Bitcoin, there's some recovery potential here. And if you can recover, obviously, this is what we're looking for, right? If you can capture a move like that, which will probably happen after the, at the end of the market cycle here, something to look for. But if you can get a big parabolic move on a recovery, then it'd be something worth catching. So it's been, right now, there's nothing, there's nothing I can see that's actionable trading right now. It's just kind of, hold on, let me draw this line here. Yeah, I don't see much. So I'm going to wrap up there, guys. What do you think of the Coinbase stock? I mean, its prospects. The stock, I think I talked about it. Bat will moon. I don't see a problem with it. Well, ads, creator network, yada, yada, yada. It matches creators with different networks, yada, yada, yada. It grabs eyeballs. I get basic intentions. It's all about it's all about grabbing eyeballs and yada yada yada. But it's like an advertiser middleman. But what is it? I don't know. I also don't like the advertising space all that much. I just that's what Google's all built on though. So here's the thing. This is what Google's built on. Google's built on capturing eyeballs and advertising, and they're a pretty big company. So that has a lot of potential for sure. I just don't have a good answer for you. Sorry about that. You couldn't export your wallet without KYC. So somebody's terminal sandwich is talking about something here about some of the project. Still don't think you can have BAT on my phone's browser. Can't link it to desktop. Need KYC to move funds. No problem, Matthew. Thanks, everybody. I'm going to wrap up here. I'm going to go through here and see if I got any of my regulars and or CTM. Geary, good morning. CTM regulars that have asked a question that I missed that I want to make sure I get before I head out. Jack, after Bitcoin pumps pull at 30-40% next big up, we back 6K level, you think? Or below that? Jack, I think the support we built here is going to be our bottom. Really. So when we make this next impulse, I would imagine that this support that all this consolidation we've done, this March 13th daily close and then the rejection here, taking that out, that 61,200 level would be a level I'd be watching to hold for sure. In the event of a worst case, getting to the bottom of this, sell off after the next leg up. So I don't think we'll go below this materially. I mean, a wick down below it, sure. But, for us, trading below it for several days, I would expect that not to happen after this next move up. All right, guys. Thanks, everybody. I'm going to light up some Doge-wave. Let's go with the wireless outro. Looking at Lee Rosevere, I guess it's called. More of a chill outro. I need to go to bed. I'm tired, so the chill outro is good. I'm sorry about the bat thing. Sorry about not being able to answer the. I'll look it up and maybe include it in a video later because I'm just not able to think right now. Good night, everybody. One more thing for everybody still on. Sorry about this last minute. Yeah, so just a reminder, I'm having Alan on Friday at 2 p.m. Central Time. Alan, the great Alan P, will be joining me live. So I'll ask him a few questions. I'll let him do most of the talking. You guys get on there, ask him all the questions you want. He's Ethereum and Layer 2 scaling expert, so it'll be a really fun discussion. Friday, 2 p.m. Central.